Welcome back to the channel. If you're looking for a channel that only posts six-figure wins and perfectly timed entries, you are in the wrong place. On this channel, I document real, unfiltered reality of scaling a retail small portfolio. So today was another operational setback. I took a hit of minus $538.05, bringing our account down to $5,321. I'm going to be completely direct with you about why it happened. I violated my own core risk protocol. I took swing exposure on 3 high beta names, Meta, Tesla, and Google, using options with less than 90 days to expiration. In fact, as I'm about to show you on the option chain, these contracts have exactly 21 days left on the clock. So hit that subscribe button right now, because tonight we aren't just looking at the profit and loss. We're performing an audit on how a great chart setup can talk you into an undisciplined execution error. Before we diagnose the tech mistakes, let's look at what's stabilizing my portfolio. So I have some core leaps positions, and when you look at our long-term macro plays, that discipline remains completely intact. So the Snap January 2027 $4 call is currently sitting up 45.7%, with a profit of nearly $150. And then I have the QS January 2028 $7 call, and that's up about 18%. So this is exactly why I use leaps. They give you time, they insulate you from that daily noise, and you just have a massive buffer. So the problem today wasn't the long-term part of the portfolio, it's that short-term execution choices in the tech sector. Let's look at the options chain so you don't repeat this mistake in your own account. So first, we're going to look at Google and Tesla. I swung these from yesterday's session stupidly. And on Google, I have the June 18 390 strike, and it has an implied volatility of 29.2%, giving us a 49% probability of closing in the money. On Tesla, we hold the $440 call, and Tesla's IV is pumped to nearly 44%, meaning we paid a premium for that volatility. And because these contracts have just 21 days left, any sideways chop is going to kill the premium value via theta decay. But the real discipline leak happened on Meta today. I let impatience get the best of me early in the session, and instead of staying disciplined and letting price action develop, I forced an entry and chased an out of the money $650 call with a delta less than 54.54. So I was sat in quicksand, and I just let it take control of me. So if you look at it, that contract only has 33% chance of expiring in the money. And by choosing that out of the money contract with only 3 weeks of life, I picked a hypersensitive vehicle that's going to leave absolutely zero margin for error if the stock doesn't instantly explode upwards. Now, why am I holding these instead of cutting them immediately like the day before and today? Is because for me, the liquidity, from a liquidity standpoint, the technical analysis to the upside still looks good to me. So if we look at the charts, you can see that Google bounced off the 2 weeks previous low, which I talked about in the last video. And I'll show that again here. So you can see that we got that sweep and bounce. And we drill down to the 24-hour, which I use instead of the daily because it shows pre and post price action. That it looked to me, I thought we were going to explode upward, but we did get a smack down at previous week equilibrium. And you can see there was a bearish fair value gap there. And then I knew we were going to hit that 390, 394. It swept in after hours. I think price is still going to move upwards. So I really still like this to the upside. And I like the delta on the options contract that I have. So I might be swinging this into the weekend, but we shall see what the market gives us tomorrow, being the last day. So then Tesla, I feel the same way. It's been since that 393.63 low, it's just been a nice upward movement. This volume imbalance gap here, let me just draw it. This right there, that value bounds key level, like price cannot break through there the last 2 days. I think that big money, I mean, it's either one, two things. Excuse me, it's either accumulation or distribution. I think it's accumulation for us for that next leg up to the 450 area, maybe even 460. So it doesn't look good on the 8 hour. I don't like that we had, it was, let's see, 1, 2, 3, 4 wicks on that 442.01 level. So that's making me a little cautious, but overall, I really still like this. I like this for our bullish fair value gap that got formed. I want to see us bounce off this tomorrow and shoot to 450. And then Meta, I like this chart. I like the high time frame chart. So you can see we have, let's see if I can draw here. We got a low to high discount, and we're going to run back to highs. That's what I think is going to play out. I really like that 691.52 previous month high. So I may have to close this tomorrow if I don't get an explosive move, but I will continue to watch Meta to get back to the upside. So really the market direction wasn't the problem. To me, my technical analysis was pretty good. The problem was my execution and the vehicles I used for this. So if I had followed my, just, the 90-day parameter of swings, getting contracts that had the proper delta, then this kind of consolidation here really wouldn't bother me. But I chose those 618 contracts, and I put myself in a position where I'm going to have to actively manage that premium decay.
Tomorrow is Friday, the final trading day of May. And if you watched my last video, you know I plan to sit on my hands tomorrow to avoid the institutional end of month rebalancing. But plans adapt when you have open exposure, and I have live trades on the table, which means tomorrow morning I'll be at my accounts, at the charts, not adding capital, not really doing anything but monitoring those 3 trades that I have open. And my goal is to manage the positions, mitigate risk, and protect the overall portfolio. So to make sure that I'm going to be locking in these lessons from the small account scaling journey, I want to announce that I'm going to be changing my content schedule around next week. So every Monday and Wednesday after the market, I'm going to be dropping some screen recordings right from my iPhone, just showing direct look at any intraday setups that I might have taken, and really can see what my logic was when I decided to either go for a trade or avoid a trade. Being a disciplined trader doesn't mean you never make an error. It means you perform an audit. When you do, you own it and adjust what you're doing. So we took a hit today. The core positions are running. Capital is still intact. And we've got work to do tomorrow with a clear execution plan. So please drop a comment below. Tell me how you handle your option contract selection when you're looking to swing high beta tech names. And as always, stay disciplined, protect that capital, and I'll see you guys in the market.